Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 409 edition of InvestData Trading Academy Live with Ambrose. Yes, what's the market across the globe is trying to rebound from some of them from yesterday, pullback recorded. For US, extending, the gain I recorded yesterday. Why Asia market, is looking southward to open trading for this last trading day of the week, tracking overnight decline in some of high-tech stocks in US as a result of few of hawkish signal from the Federal Reserve officials. These are the things so that is also pulling down Asia stocks. Also ahead of key payroll data that will come on monthly that will also give a clue if there is a rate cut coming immediately, or because it is this rate the economic data that the Fed chairman and also the committee over there have also insisted that it is what will guide their decision on whether adjustment or not. That's why they don't play with inflation data. They don't play with this job report we are looking at and other purchasing manager index. All this so that you give them a clue where all the state of the economy and also GDP. But today now all eyes are still on what on this labor report as it remains a key factor for the Fed committee on interest to know if there will be rate hike for starting moment from rate cut, sorry, starting moment from now, or they are still postponing whether they will go hawkish moment from now. These are the things. Also, this fear was also worsened with the Middle East threat by Iran military that military threat on military threat action against Israel. That also have kept what we call risk appetite largely subdued. These are the things that also creating some fears in terms of, but we can see that there's the trading volume for that market were a bit down as a result of what Chinese market holiday. These are the things also that is also influencing the market there. But I tell you that as the political tension across the globe is not helping not only the oil market or the commodity market, it's also affecting investors' what sentiment and also confident on what is going to happen going to the future. We saw that Japan leading index also saw a loss at the end of the day, and I also saw that export-oriented stocks on that Japan also suffered a big loss during trading as open, despite the rebound that they recorded 2 weeks ago from the market, but we're seeing a pullback in that domain. Also, we're seeing that the stocks in India, because of India is also looking at to see the outcome of their reserve bank meeting that's also coming up today to see how it's going to pour kind of confidence more on the economy. But we've seen that the market there open flat, while all eyes are still on the central bank in that a domain. I expected that there's likely to be a kind of what we call a rate hold in that environment around 6.5. All these are what the investors are looking at, and also they probably that they're going to look at the inflation and the economic growth more closely to see, even though they leave their rates unchanged, that their eyes will be on this inflation and economic growth that will guide them going to the future. This is for what for market in Asia, but also in Europe. I've seen that also the market there is mixed. Yes, it's mixed at this hour because of what all eyes are still trading kind of tracking what is happening in US market. Don't forget that I told you that especially this part of the economy, they don't play with what is happening in US economy because of what the role they play in terms of directed business and all. That's also why I think the market there are also open a bit flat, and otherwise some market there are in green for Eurozone. But if you come back to look at what is happening in US right now as we speak, I think that the market in US have rebounded largely as all eyes are still on this monthly job report, as I told you earlier, to give them a clue over what Fed will be doing. Are they starting a rate cut or are going to go hawkish? These are also announced for the first time after COVID-19 job cuts for that company. And also the Treasury Secretary of US, or also the former Fed chairman, is also visiting China. Don't forget that China and the US are always look ahead with one intent or the other, either in terms of policy or in terms of trade issue and all those things. She is visiting China now. We expect also that also build relationship between the two countries. Like I said earlier, today, Friday, main focus is mainly on what on this monthly non-farm payroll report that will be released in a moment in this section today. That will also guide to see. Also, don't forget that the second quarter of the year in market has opened in this direction. We have seen that after two days we saw a little pullback, but still the market trying to stabilize for this. Also, like I told you, the surprising growth in manufacturing data that came from US also the start for me. Also, this is also good for for the market, giving the insight of what's likely to happen. If Fed, looking at this figure, it will also bring whether the easing cycle will start right now or not. That's why all eyes are there. Also saw that the service sector survey or also saw that US also is coming back, powerfully in that regard. That's also what investors are also looking at. That's why all eyes are still on this data that is also going to give a clue. Like I said earlier, that US market rebounded today. I mean, it edged up in the green, rebounding on the degree after series of sell-off the previous session, just because of what profit taking and also rebalance of portfolio for the new quarter. With focus on now on the release of labor data, that also guide where the market will swing to, where sentiment will swing to the market. That's why you have to look at this as all eyes are still on the major indices in that market. I believe that today will conclude where the market, whether Fed will also be looking at the adjusting rate or adjusting rate towards the south or leave it unchanged again in their next meeting. It is all this information that also guide them the Fed on what to do. The oil price crossing $90 yesterday as a result of what the fear. I said that the fear of that Iraq and also as threatening also to take a military action on Israel and all these things. Also the increasing geopolitical fear of Taiwan and also independent and all those stuff. So we're seeing all this threat here and there. It is not helping at all. This increased tension, geopolitical tension is worsening confidence, and that's why people are concerned that there will be tightening in supply of crude oil. Even at the end of OPEC ministerial meeting yesterday, we saw that they left where they are caught on change as it is, and that's why I see that even we're seeing the forecast again coming that oil price is going to hit $100, and that will be good for those oil producing companies. Good, Nigeria is not left behind. It's a plus for us in Nigeria as we look to our reserve, getting becoming robust. If we sustain our production, also try to meet the OPEC quota for us, that will be very good for Nigeria. It's a good one that we are seeing that the market, in the material market are rebounding, and even as also what is happening in Ukraine and Russia is not even matter. NATO will also try to look at what to do, capacity building and all those stuff. These are things that are going to shape the market to the coming week. But today, all focus are still on this key non-farm row data. Do that a moment from now, on the US market. Also give a clue on where US economy is standing. Just like also all eyes are still here down here, in NGS. Yes, Africa is not left behind. Africa is still this, but we're looking at NGS as also like extending 3 days pullback. We have seen now. Today market is open also slightly in the red for NGS. But before we go further to look at what the chart is doing, we want to look at what is the state of the market, and also look at the numbers that came yesterday, especially from the banking sector that all eyes are on because of the recapitalization move. I see that a lot of investors are kind of jittering or panicking in their position with banking sector, forgetting that it is opportunity for them to make money in the market. Yes, there will be oscillation in the banking stock, but those that will be very intelligent and those that were going to guide, exactly when to enter into a stock or when to go out. Because I believe that this application is going to create wealth for those that are very smart and also have cash. It's not a time for you to say you have cash in account, you now trade down. Always have cash to see opportunity that will come, to catch the opportunity that will come. And that's why I always advise that if you are trading, don't take all position with all the cash out. Leave some cash in your account so that anytime see opportunity. It's not important that you must enter position all through the week or all through the period. No, you must know that there's time for you to. That's why timing is very, very important. It's key in equity trading. And we are seeing that opportunity to know that the calculation in this next 2 years in the banking sector is going to create a lot of changes. Yes, as we speak, that all eyes are still on this banking stock, and also the first quarter result that will come to give insight to what we expect to see companies, on the exchange that has financial year going to do in 2024. It's going to give the market the insight of what we expect, and that's also going to shape the market, as expected. But for investors that are really savvy, that are very smart, what we do, we look at where can I position right away now, so that I take advantage of this earnings season. We are seeing dividend coming, we are seeing earnings that are missed. Yes, but for the number that came from the banking sector, we are seeing a lot of improvement in their performance. Even their payout, and also they are factoring in the not taking advantage of the FX gain as directed by the regulator. But I think that most of them have paid good dividend. We want to look at how we expect to see all those figures that are result that apart from Access Bank, others are going to affect them positively. Are they going to start going down? These are the things I want to look at so that you also know where to position as a trader or investor. Like I said earlier, that this opportunity was in the market, in terms of pullback or sell-off or profit taking in the bank sector, is a big opportunity for us to make money in the market. Like I said, if you look at the market before we go to the earnings we want to look at, market is trading down in red as we speak now, and this for straight 4 days we are seeing it. And if we come to chart, I've said it in this chart that once we see market forming a double top, I see market also trending. It's a sign of what looking for something for either a breakout or a pullback. Correction is good in the market, pullback is good, great opportunity to buy. But I see that correction is coming in. And yesterday we saw that market have broken down the T line, a sign of weakness and a sign of change in direction. That means a pullback at this time or a decline phase we are entering. That also will tell you that you need to change your strategy, because when you see market entering over sold region, look at those companies that have capacity to rebound, and what are the factors that will drive the rebound of these companies is very, very important. As I have saying, the market currently is between 103,532.47 4.47, down by 203.61 basic point. That is equal to represented by 0.2%, 0.24% as we speak right away. This is the state of the market. But look at market breadth or market internal. We have seen that market breadth is still negative, and in the trend we have seen also for the fourth trading day, apart from Monday holiday for Easter. Since market opened in the second quarter of the year, market have been red. But I'm not panicking. I'm not staying with any market. Don't panic. This is the state of the market. This is also what what for the dynamics of the market. No market remain or no market remain down. But it's an opportunity that creates for investors to take advantage of the prices and also buy, because it is price that will trade. Yes, I said the market internal is negative. We are seeing that how about 20 losers as we speak now, and just 9 gainers, and we are seeing the MTN amount that is a very marginal gain, about £1 for MTN. That's why we are not seeing a change in the index, but still we are seeing that sellers are dominating the market as we speak. The top losers are Sako, Lasako, Abebe Buildings, Mortgage Bank. We are seeing the Women Bank and STANBIC. These are the top losers as we speak right away. Also, gainer side, on the draft side, I see that the equities is gaining 10%, doing a 319 kobo as we speak. Also followed by Annihilation, also 5% in the green. Massage also 2.3%, around the 5.83 kobo. But I see that the NGS is also in the green, 2.2%, around the 23.50 kobo, and the Dangote Sugar 57 naira 20 kobo, also up by 2.1%. But in terms of volume activities, we are seeing that there's almost like a cross view about 1 billion shares have been traded in Abebe, building a bank, a merchant bank, and also we have seen a cross view of almost 400 something million shares in a tourist company also. But today we are seeing that now leading on the activity chart is Abebe building, followed by Senate Bank 49.3 million shares traded, Access Corp 19.8 million shares traded, and UBA 18.8 million shares traded, and Digico 8.3 million shares. This is the state of the market right to speak now. But if we look at the number that were related to the market, which is very, very important, we need to look at them before we continue on our chart. Yes, we'll see the number that came from STANBIC IBTC and also WEMA Bank. These are the banking stock I've seen earlier of that came from Access Bank. That the trend we're seeing that the bank's numbers are looking very good. We're seeing a good two-digit growth in their summer. We're seeing a three-digit growth in their bottom line, which is also very good for me. It's a sign that these banks are done well. And don't forget that the policy, as to speak, neither monetary policy, we call it policy of the government, it's also favoring the banking sector. But so that this also will continue, and that will also guide investors. Like I said, we see a lot of opportunity in the banking sector, creating wealth for investors that are designing in nature, that know what they are doing in the market, not those that are panicking or following a bad wagon. Yes, if you look at the figure that came from STANBIC BTC, very impressive figure, despite that there was what we call a restricted for 2020, restricted account for 2022, sorry. You see that the gross earnings moved from 284.88 billion to 461.1 billion, up by 62% in the green. PAT, which is the after PAT, we're going to factor in the expenses of collecting the tax, collecting the interest, and all those stuff. Expenses like collecting the fees and the the fees and commission and all those stuff. The PAT stood at what? At 140.62 billion against 80.73 billion in 2022. That also represents 74% up. This translates to what? 10 naira 2 kobo earning per share against 6 naira 2 kobo in 2022. And also, we see that the earning the profit margin for the period also saw an improvement from 28.3% in 2022 to 30.5%. That means in every 1 naira in this gross earning, about 30 kobo is also retained as profit. It's a good one for STANBIC. For me, it's a good one because all over the world, it's standard that if profit margin must be above what 10%, and this was 30, it's a good one for them. For me, for this translates also a good dividend at the end of the day. Final dividend of 2 naira 20 kobo, against the 2 naira paid in the previous year. But when we add the interim at the period earlier, that would be like 3 naira 20 kobo. If you look at the operating cash flow for the period, it was negative of 61.42 billion against the 84.23 billion in 2022 restated. But don't forget that most times, because of the nature of the banking sector, you see their cash flow most times are negative, but it's not bad that it's going positive. But because of the nature of their business, and also consider that the bank balance sheet remain robust, even when the central bank is also saying that banks retain earnings is not part of its capital base. But most of these banks remain solid, and put the STANBIC is not left behind. We see the good number there set of their balance sheet. Yes, look at what is happening in WEMA Bank. WEMA Bank, so that WEMA Bank result was even for me. This is an impressive number for bank. This is also a bank that does not few years that I moved from regional bank to national bank. Yes, we are seeing that the bank is growing solid, and all moves are being taken by the bank management to make sure that the bank solidify and also recapitalize to also either to become a bigger national bank. And these are the things that we are seeing. The numbers in recent years have shown that the bank is being refocused, and that focus is also bearing a good fruit for the bank. You can see that the WEMA Bank gross earnings moved from 133.1 billion to 226.91 billion. That is 71% in the green. This also, at the end of the day, we see that the PAT, the bottom line of this company, was up, or for this bank was up from 11.35 billion to 35.99 billion, representing 217% in the green. Translate to what? 2 naira 80 kobo earning per share against 88 kobo posted in 2022. And this translates to what? To a bonus, a dividend of 50 kobo against 30 kobo dividend. And you can see that also we are seeing a lot of improvement in terms of managing their resources, their funds. We see that the profit margin improved from 8.53% to 15.86% for year under review. This is a good one for WEMA Bank. Even the dividend payment of 50 kobo against 30 kobo is also good. Don't forget that the whole big FBN holding before now have been paying 50 kobo. If a small bank like WEMA Bank is paying, for me it's a good start for WEMA Bank. And also for those that are thinking future, I think you should know where you also be putting your money right away, despite the capital move that we're seeing. That will go to make the bank stronger, and also boost the economy, and also that will be good generally for both investors and also other stakeholders in the economy. Yes, operating cash flow for Human Bank for the year 2023 was up towards to 391.9 billion from 180.54 billion in 2022. As I said earlier, the balance sheet of Human Bank remained very robust, and also looking up, to say that the bank is going somewhere. Yes, because of our time, we look at what is the market doing by looking at what by looking at the chart. Look at the chart here, because that the market maintain a kind of it's like trending a movement. We want to call up our indicators that will help us to make it clearer where what the market is doing and where the market is going from here. That's why I don't play with my T line. We call the T line up so that it gives us more information of what is happening in that regard. Our T line, our money flow, and also I also call up our moving MACD. MACD, yes. We now change this one to what it what it days. Yes, we quickly look at what is happening here. You can see that the market has started at this point. But as we speak now, market has gone below what. You see that, and we saw it yesterday, that this market from this or the first trading day, that the market are going to trend down. To trend below T line, say that what momentum has changed. You can see volume yesterday, you can see also what is also happening today. You can see a big volume in the market right now. I tell you that the market has a lot of volume. I told you about 1 billion traded in Abebe, and at the same time about 400 and something million, cross the in tourist company. You can see that the volume today, but market still remain what in the Grammy sellers are having much hand than the buyer as in the market in direction. Also, money flow, because the money flow is looking down. Even as speak now below 50, which is also not too good. Funds are leaving the market. Don't forget that as the fixed income market remain attractive, and also people are seeing opportunity there. But I still tell you that the best place to be in the equity market, because of our stocks is cheaper. Anytime a foreign investor wants to come and take position in the equity market will turn around, and that's why as market remain kind of low valuation or on a value right now or at oversold, this is the time for you to start taking position in the market, because already the market is already ready to what oversold. Looking at what the money flow where it's flowing today. This is for what for a day chart for what for index. If we look at what is the 1 hour chart saying on this stock on the market generally. As on 1 hour chart, there is a sign of market that to resist the decline. On 1 hour chart, you can see that it has turned green in the last 1 hour. You can see it here green, but I will say that the market already at oversold region is a sign. And once the market reverse up at this time, it's time for us to also make money in the market. As I said, it's the time to know when to keep the right stock, as we are seeing pullbacks here and there of correction. Yes, on 2 hour chart, market is still below the T line, and money flow is already reading at 28, which is below. Now also we are seeing that the MACD is also bearish on the 1 hour on the 2 hour chart. So finally look at the 4 hour chart to see what the trend is there. Look at the 1 or 2 stocks before we call it today. I also look forward to see the most participants for Q&A that is coming up tomorrow. Last Saturday, because of the master class, was not held, but this time it's going to hold by God's grace, tomorrow at 12 noon, so that those that are members also prepare. I will also be sharing how this market is going on, why sector rotation is very important, and continue to do that as we have seen some signal from different quarter what is going to happen in this second quarter of the year, going to the work to the end of the first half. That also helps us to make what from the right. I look forward to see you in the class tomorrow. Finally, before we go, let's look at what is happening in Mansard. Mansard, if time permits, Mansard and Fidelity. Look at them, let's see. I see that Mansard in the 4 hour start. I see that it's at touch around 82, but doing around 80 now. But see that it's very strong. I see that it's above the T line. I see all this why came back, above the T line on 4 hour start. For me, it's a good one. Money flow is reading at 73, and I see that that MACD is also kind of missed here. Try to come back and see the sign here on 1 hour chart. We'll also look at a day chart for the day chart. I see that we're seeing after yesterday we saw a pullback. I see that try to go up now this morning. I see there money flow is also looking up at 40. What's across there, and also MACD is not a good sign at this hour that yes, this is a good slide for 1 hour. You can see it here. The way you can see it. For me, this is a good place to watch very well. Look for the stock. Also look at 4 hour chart for the same stock options already. I like good one. Let's look at what is happening in the in Fidelity Bank parameters. Look at also another stuff. Look at what is happening in Fidelity Bank. Fidelity Bank. Fidelity Bank on 4 hours, you can see that it's slightly below the T line. The money flow is entering on 4 hours. For me, it's a good one. Because look, it is very strong. You can see that it's slightly below the T line, and the rise for 4 hours. Look at the day chart. The day chart the same pattern. For money flow is looking up above 50 marginal. You can see there. Market is also very indecisive at this point. You can see that where market is. If I look at the 1 hour chart, I've done this forward for the stock. For Fidelity, Fidelity already had to pursue the job, also make it attractive, but because people have been cautious about the innovation in the industry, let's also keep our finger crossed. But I see potential in Fidelity. If you are there, you can still watch and see their work, their audited account if you are in. Yes, time is fast spent. Oh, I said first, sorry. Okay, see you tomorrow or on Monday again by hopefully by God's grace. And for those that lifestyle, see you tomorrow afternoon. Bye and God bless you all.